Meditators, today's episode is an incredible one. Now, we've had Joel Birch on the podcast before, but I had no idea how hard this man has worked and what sort of disadvantages he's overcome to get to the position he is in today. And that is co-founder of Stacked, a startup that automates cryptocurrency investing. You're going to hear all sorts of advice for investors and traders in the cryptocurrency space, entrepreneurs, builders, networkers. Incredibly useful episode. Now, I was blown away by this episode. If you want to blow me away even further, remember to like and subscribe to this channel. As always, to stay one with the crypto markets, do not forget to sign up and get your 6 free Market Meditations newsletters a week. Link in the description below. It'll help keep you up to date with the crypto markets. A quick thanks to our partners Exodus and Nexo for making this podcast possible. There'll be more on them later. Joe, back again on Market Meditations. It's been 8 months now. Last time we spoke, you were at 5 employees. Now your team's 20 members, maybe bigger.
Maybe, yeah. I'm not exactly sure of the number on any given day, but yeah, we've grown a lot. It's been really exciting. The bull market helps, certainly.
Just the bull market, or I think some aggressive entrepreneurship on your part and successful building? Because a lot of businesses has fallen apart during the recent dip, really taken a hit, and you guys seem to be thriving. Every time I chat to you, something big new has happened.
Yeah. Well, we're in the unique position as a software service provider where volatility is good for our business. Listen, we're going to correlate closely to the market for the most part at this stage of our company. So if crypto's doing generally poorly, we're going to have slower sign-up days and less volume and things like that for our business as well, right? So we're not like immune to some of those market movements. But at the same time, when Bitcoin dumps 40%, the very nature of being an automated investment platform is that at least some percentage of our users used our platform in order to short that dump quite profitably, right? So, with that, there is definitely, we're kind of like an exchange in that way where our business will kind of follow volatility. But yeah, some really exciting stuff that, one of the things that we're really working on that we may get a chance to talk about will hopefully allow our users to dampen their exposure to volatility. We're very interested in trying to decorrelate from the market in some ways. So
when you say decorrelate from the market, do you mean your users' performance or just how the business as a whole does? And do you guys have a benchmark you try to outperform in terms of growth of the company relative to the market as a whole?
yeah, that's a great question. I mean, the core like North Star for the business is for users to be more profitable for longer. The very unfortunate reality is most people don't make money trading these markets. They're too volatile and there's scams every which way, and it's the Wild West. It's like everyone makes money in the stock market, right? Like in the last 10 years, that's easy. Maybe you're not as successful as the best day traders in the world, but like it's a buy and hold market. But crypto is not a buy and hold market. Unfortunately, most users do buy and hold, and if they don't, then they trade. And there's usually nowhere in between. And if you're day trading, you're statistically losing money. If you're again part of that 10% that is profitable, like incredible. And if you're just hodling, then you're completely dependent on the market cycle, which in the last 6 to 8 to 12 months has been super profitable. And that's been great. Ultimately, we're trying to build tools that give people some more guardrails and allow people to increase or decrease their risk reward based on their actual risk profile. And if users do really well, then that's good for the business. To answer your second question, what's good for the business is users making money. And so ultimately that's our core mission, is to help users be profitable and stick around for a long time. I mean, we want people investing passively into Stacked for the rest of their career. We want them to treat it like a 401k. We want them to treat it like a true, proper, long-term passive investment.
There really aren't that many options in crypto right now for really long-term investment strategies, which is to be expected for such a new market with such crazy volatility. I mean, you'd be called crazy wanting to hold Bitcoin for a huge amount of time up until recently, where we've just seen multiple market cycles of performance, tools like rebalancing, without extortionate fees, because there are a few options out there, but they charge you through the roof, either through visible fees or spreads, and Stacks bridges that gap, doesn't it?
Yeah, I mean, most definitely. One of the cool things about the platform is that we're truly non-custodial at, as we stand today. And so you connect to your preferred exchange. If you're an FTX fanboy, we will support you. If you're preferring to hold your assets on Coinbase, that's fine too, or Binance. That also works. Like our mission was to really come in and be like this software layer that really simplifies the entire investing experience and then rolls out tools that help you be more efficient. So automatic rebalancing is one example of a tool that users run on Stacked. Again, in the future, we hope to offer like curated risk adjusted portfolios to users where we can actually give them curated investment advice. But up until that point, people use Stack to either automate trading strategies or automate the buying of and investing in pre-built portfolios like the Sam Bankman-Fried basket or the Bitwise index or the Coinbase 12, things like that, which really just makes it easier to invest and hopefully gets people, less likely to try to flip positions all day on leverage. I mean, that's ultimately what's killing a lot of these retail traders.
Now, what's impressed me so much is how Stacked has managed to really profit off of this bull market, like take everything it has to offer, make big moves consistently throughout, and stand strong even now where the market has gone down. One of your very interesting moves was acquiring Alert Retin. I can't pronounce it properly. Alert. Can,
Alertatron.
Alertatron. So Alertatron was a very big purchase. Can you talk about why you guys made that purchase, the strategic thinking behind it, and how it went, how it's now gone after the acquisition?
Yeah, so Stacked again is designed to be a retail investment platform that's super simple. We're a platform that has automated the market orders in excess of $10 billion, automated many hundreds of thousands of trades for retail users. With that said, this market isn't just made up of super passive investors. There's this core group of people, investors, traders, really, who have complicated trading strategies or very specific order conditions that they want to automate on exchange, like the automatic buying and selling of a coin as the price moves, like laddered orders or trailing stops and different complex things that you can't do natively on exchange. Alertatron is a software platform that allowed really savvy traders to automate their trading view alerts and their automation signals. So if there was an alert to ladder an order that fires from TradingView, which every trader pretty much uses exclusively in the crypto space, especially, then Alertatron can receive that alert from TradingView and then execute on exchange. And so it was a way to automate TradingView alerts, essentially, is why the founder built it. So that was interesting to Stacked for a few reasons. One, the founder is a galaxy brain, and I'm obsessed with trying to surround myself with people who know all the crap I don't know, which is like most things. And so that was a no-brainer. Let's try to get this guy on our team. He's a rock star. He built this entire thing like by himself. The other part was that it instantly allowed our pretty complex but very simple to use execution engine. It opened the door to way more complex order types that we can offer to our authors. A huge part of the Stacked business today is our marketplace, where traders and trading strategy creators make automated trading strategies available for sale. And we act as like the trusted intermediary, right? We process the credit card, we do the customer service, we execute all the trades and handle the exchange APIs and all the complicated stuff. You just connect your exchange and then buy a bot on the marketplace for $100 a month. And we kind of bridge that gap. So with that, like a huge chunk of our business is authors, is people who create trading bots, is people who write strategies, is hedge funds that like run complex trading algos. And so Alertatron was a no-brainer for us because it's a tool that all of them need. And if we're going to help them sell their algos and handle the retail part of their business, we may as well help them execute their stuff on the back end as well. And so it was just a way to kind of bridge the gap with our more savvy users and with our authors. And to answer your question, how it's gone, we completed that acquisition in February, and the business has paid for itself. It's done incredibly well. It's just a really robust, steady as she goes type of business, whereas stacked may be a little bit more volatile with the growth that we see.
Oh, fantastic decision making. So it was both the software that you guys were interested in and the talent that built the software specifically. Acquisitions is something I'm definitely learning about as I speak to more and more people who have gone through them. And so often, in fact, the talent is the most important thing. People look for the team and, in fact, refuse to make an acquisition if they don't get the team with it as well. Uh, Besides that, how have you guys managed to, I mean, you've grown hugely, continually attract the right type of talent to Stacked?
Well, it's not been perfect. Hiring is extremely difficult, and hiring in crypto right now is extremely competitive. So I have to give a shout out to Rob and his team at Proof of Talent, who you may be familiar with. And he has helped. His team has really helped with some of the more key executive hires. So, like finding a trusted third party who can really help bridge that gap is important. But otherwise, it's been my team and my VP of product, my VP of engineering, interviewing hundreds of people. Most of our hires have been on the tech side. Developers. We recently hired a blockchain engineer, data engineers, front end, back end, all that kind of fun stuff. And so it's a matter of, it's not hard to get applications because it's such an exciting industry to work in, but it's hard to compete when you have some businesses in crypto that are literally infinitely funded. And then it's also hard to filter through all the noise. So it's just a lot of groundwork. We've definitely made a few not so great hires, but that's just kind of par for the course. And ultimately, we do try to hire like fairly entrepreneurial people who take their part of the business very seriously and act as owners of their part of the business. People who can think, critically, think outside the box. People who don't need me to tell them what to do every day.
How do you handle a not so great hire? When it happens, when you bring one in, when do you notice that this was, what's your line that this was a bad decision? And then what do you do after?
It's usually feedback from others. Almost every person has to work with other people. When you have multiple people say this person isn't with it, or this, that, or the other, the earlier in a person's career, the worse that is, right? If you're 2 years senior and you've proven yourself and you've done great work, and then I'm getting feedback that things are slipping, that's a whole different conversation. Like maybe there's something going on, right? That is hard to, whatever, hard to understand, or their specific needs. But yeah, if you're 2 weeks in and people are like, this is a miss, you're quick to fire typically. It's like we're not wasting any time, especially at this stage. And that's never easy, but it's business.
Yeah, it never is easy, and it's very common advice to fire quickly, because it's the best way to find out who is a fit and who isn't. Yeah, definitely a difficult conversation to have.
Slow to hire, quick to fire. We take our time making the hiring decision. If it doesn't work out, like we got to cut our losses and move on. We're just in this very pivotal stage as a business, and we're in a very pivotal time in the market that our business relies on. I mean, it's the ultimate, big bet play here. I mean, it's kind of going to be an all or nothing situation. So you want to be super efficient with your decision making.
On the topic of expansion, another incredible thing you guys have done recently is secured a round of funding. Uh, what made you guys go for it, and what are the expansion plans? To how are you planning on using this funding?
Yeah, as a founder, I used to always romanticize funding and raising money until I did it myself. When I had different startup ideas, like this is not my first rodeo. It's taken me 15 years of failing at building startups, as we talked about on our last time we like chatted, before you kind of start to find stuff sometimes for some people. I used to romanticize funding. Like I want to raise as much money as possible. With Stack, that wasn't the case, and largely for two reasons. One, I had so much conviction in the product that I wasn't like desperate to secure it with cash. Like, I know that cash doesn't solve all problems. Like, if you don't have product market fit or the right team or whatever, you dump cash on it, it's not gonna fix itself. And so it's because I had a ton of conviction regarding Stacked, and I had a lot of confidence with what we were going to be able to do. I wasn't as desperate for funding early on, and so we took very, very minimal funding. We spent less than $500,000 of like outside capital in the first year of like building the initial product. I didn't take a salary. My founder didn't take a salary. Like, we built very lean. We did the most recent round of funding from a strategic standpoint. We were running at a profit. We were not immediately in need of capital. Our balance sheets are healthy, but on the board side and on the like advisory side, we needed some more strategic brains. And we wanted to add absolute rock stars. So we were joined by Jump Capital. They're one of their primary LPs is Jump Trading. They're one of the largest, most respected market makers and algorithmic trading firms in the crypto space and beyond. We were joined by Motivate VC, who has been early backers of huge fintech success stories like TradingView or Chime and some others, whose founders have successfully exited companies before. And Starting Line VC, early investors in Unchained Capital, which is like a Bitcoin core, like BlockFi competitor, early investors in Cameo, and a ton of other successful companies that you may be familiar with. And then we also added, last but not least, a gentleman by the name of Brian Barnes as an investor and an advisor. And Brian is the CEO and co-founder or founder of M1 Finance, which is kind of fintech's newest unicorn. M1's done really, really well for themselves over the last couple of years, being like kind of like a Stacked for stocks, and Stack's trying to be like an M1 for crypto. So having him on the team is a huge win for us too. So it was really all strategic. It wasn't so much for the capital. We didn't raise a ton. It was to get the right people on the cap table in advance of kind of some of the plans that we have for upcoming growth.
Sounds like an incredible decision, and I definitely hope that the new people on the cap table can help guide Stacked exactly where you guys want to go.
Yeah, I mean, it just kind of goes back to like surrounding yourself with people that are smarter than you, which has become kind of a cliche thing to say in the last few years. But your net worth really is your network, and when it comes to running a business and trying to take Stacked from, maybe a company that could be worth whatever it is today to competing with BlockFi or serve hundreds of thousands of users. Man, if I have the opportunity to surround myself with people who have literally done it before, I'm going to take that opportunity. I mean, they've done it before. I've learned so much running this company over the last few years. I would no doubt provide a ton of value to someone who's trying to follow my footsteps. Well, I'm trying to follow in these guys' footsteps. I'm trying to have the success that TradingView has had, or Chime, or BlockFi. And so I'm following in the success of people who were a part of those journeys.
Yeah, why learn from your own mistakes when you can learn from more of theirs?
Yeah, exactly.
Speaking of mistakes and previous, well, not mistakes if you look at where it's gotten you, but previous ventures and earlier on in your career. I told you before you came on this episode, we're doing a fun new segment to the podcast where we discuss with our guests how they made their first $100,000. And normally we get some pretty cool stories. Quite often we also get, I got very lucky in 2017. But Birch, could you describe your journey and challenges to making your first 100K either in or out of the markets?
Yeah, the first 100K is probably harder than the first million, at least in my experience. Things start to snowball, but for me, it was not in crypto. I was fortunate to be really early at Grubhub, which is a super successful, food delivery service here in the States. They were acquired recently for many billions of dollars by Just Eat, which would be more familiar to your international audience. But I was with them like before DoorDash was invented, before Uber had Uber Eats. Like, this was early days of some of the more niche brands, and I led restaurant growth. It was my job to um, help scale the business at the restaurant level throughout the United States, and like come up with the best way to sell the product and all that sort of stuff. And so what I'll say is, like, for me, I always wanted to be an entrepreneur. It was just in my blood. I had an eBay store when I was 16 years old, and eBay was a 2-year-old company. Like, I've always been trying to kind of create on one hand, and then, like, if I can monetize those creations on the other hand, the better, because then I can continue to do it. Like, if you need to make money, so you may as well make money doing something you love to do. And I like to create products and experiences, and it's something I've always really been into. I knew that if I wanted to have the best chance at that, I'm just a kid from the neighborhood. I didn't go to Stanford. I don't have a law degree. I don't have rich parents. I don't know founders and investors. I don't know anyone if you rewind the clock 15 years. So I said, listen, I'm going to have to infiltrate the big dogs. I'm going to have to go find myself a job at a startup. And I lived in Florida at the time. And it was New York, Chicago, or San Francisco. Those were the options I had if I wanted to have a good shot at working for some like up and coming startup. And I chose Chicago because of my Midwest roots and because it's a better city than New York or San Fran, places I generally didn't like. And kind of the rest is history. I basically, interviewed my butt off and went through a lot of ups and downs in like the first year, but found myself landing a sweet gig at Grubhub after convincing their entire executive team to take a chance on me. I was 23 years old and I wanted to lead restaurant growth from a training perspective. Luckily for me, they were still a fairly small startup. They were smaller than Stacked is now, which is crazy to think about. And so they also couldn't afford like the absolute most senior person in the world. They were looking for a younger, greener, hungrier kind of person. And that was me, and the role was good. And that got me stock options, right? And so, like, one of the best ways for if you're not going to be an entrepreneur, even if you are, I highly recommend that you go and try to work at a successful startup for a couple of years, because you'll learn just ridiculous things. I was there for 5 years. But if you're looking to build wealth, besides like real estate, obviously investing is the play. See if you can't find yourself a role with an up and coming startup. And if it's a crypto company, maybe even better, because in 2021, we have these crazy things called tokens, and they tend to have decent liquidity. And man, if Grubhub would have given me some Grub tokens back in 2013, they'd be worth like $1 trillion right now, right? So like the equity was tight. I made my first $100,000+ when we went public and sold it, and that was like my first little windfall in my career. But kind of the point is that if you can get equity or tokens like from fast growing like smaller companies and take a chance on them, it's probably your best shot at making that first 100K. It's probably way easier than like trading 10K to 100K or something like that.
Oh, you said you learned some pretty crazy things from the Grubhub founders. What things did you learn?
Yeah. Well, I think for me, the big thing was like the importance of like building a good culture, and like how to, I think, just ethically run a scaling tech company. We had millions of customers. We had tens of thousands of restaurant clients. By the time I left, we had thousands of employees. There's there's ways that like leadership treats people, treats customers, creates policies, treats employees, that affects how the company operates. And I can tell you, I was obsessed with going to work every day. I absolutely, until the day I quit. And I'm someone who has like severe ADHD. I get bored of Stacked 3 days a week. So the fact that I continued to, just absolutely love every aspect of my job speaks volumes to how they structure the company, because it went beyond like my direct manager, director, VP, whatever. It was how Grubhub treated customers. Like, you can't call Uber, you can't call DoorDash, you can call Grubhub. You can live chat with Grubhub. They will give you a refund. They will help you. They will call the restaurant. I know this because I worked in their corporate office in Chicago, where they had 2 floors full of 200 customer support reps taking phone calls 24 hours a day, 365 days. They didn't outsource to India. They didn't outsource to some other part of the world. They did it right here in Chicago, and created jobs in Chicago and gave people a good customer experience. So I learned a lot of things that I could talk about for hours, but like some of the more impactful stuff was like, this is how you treat customers, this is how you treat employees, this is how you treat investors, this is how you treat those that you're doing business with. And I think we've taken a lot of that to heart at Stacked. Like, we have live chat on our site, and really responsive email customer support, also really responsive tech support for people who get technical questions We've made a lot of investments on the customer success side. We're a fairly small company compared to like a major exchange in terms of total users and stuff. Yet I'm pretty sure we probably have more customer support reps than some major exchanges based on the response times that I've seen out there. So I think investing in that customer experience has helped us be successful. And if we continue to double down on that experience, I think we're going to be more likely to continue to have success, because even if someone has a poor experience with Stacked, we generally do get really good feedback from those users and say, listen, I'm really grateful that you were there to help answer this, guide me through it, give me a refund or whatever the case may be. And so that's probably the biggest lesson.
I mean, that's something I'm going to take away from how Grubhub worked and how now you're successfully running Stacked in how I conduct my own business. So thank you for sharing that, at least for me, Joel.
Yeah. People want to feel heard ultimately. And it's a huge opportunity in today's market because it's so easy to communicate with customers and so many bigger organizations neglect it. So when you can win on customer experience, like they'll go out of their way to use your product, even if it's a little more expensive or a little more, difficult to use or whatever the case may be.
As the crypto industry continues to mature, it's natural that more and more wealth building platforms will arise. The problem with many of these, however, is that they are often so complex that it disincentivizes people from using them. This is why I've partnered with Nexo, one of the top crypto lending platforms in the world. With over 1.5 million users and 15 billion assets under management, Nexo combines the yield earning features of crypto with the familiarity and ease of centralized finance. Nexo allows you to earn interest at a competitive rate on crypto and fiat. They also allow you to take out loans using crypto as collateral so that you have access to cash without needing to sell your investment. You can even trade directly on the web platform and mobile app in an intuitive and secure way. If you're looking to embark on the journey to financial freedom whilst minimizing time and frustration, I highly recommend you check them out by visiting nexo.io. That's nexo.io. One of the biggest problems in the crypto industry right now is that there are far too many applications and none of them are very user-friendly for beginners. That's why we've partnered with Exodus. They're a desktop and mobile wallet that allow users to own their own private keys, navigate a very easy interface where they can view their portfolio, store multiple different cryptocurrencies, as well as exchange and earn interest on those cryptocurrencies. So if you're interested in checking them out, head over to exodus.com. That's EXODUS.com. If you could go back to right before you joined Grubhub, with all the knowledge that you have now, outside of doing ridiculous stuff like buying lottery tickets or investing in certain stocks, how would you do it again? Make that first 100K?
Yeah, well, I would have held on to my early Grubhub stock longer. I started selling Grubhub stock shortly after we went public, and then the stock proceeded to like 5x or even 10x over like the next couple of years. So that would have been nice.
Is that hindsight? Or do you have
Well, you could have had more conviction, but like I don't think it's like my risk, like the way I generally manage my crypto, my normal investments, my money is like I'm not like an all-in-one kind of guy. Like I'm the guy who is constantly buying in as things go down and always selling on the way up. So like it costs me money in the long run always, but it also saves me a ton of money. Like in this last month, I did not take 50-60% drawdown. I barely took 10% drawdown in this entire market crash. So, that, but I also didn't 100x my portfolio in the last year, like a lot of people I know. So, that's just my style. But yeah, that's more so hindsight. I mean, I would do it like the same way outside of like maybe maybe trying to like start my company sooner, or like having more conviction when I finally left Grubhub. I did get pretty complacent there at times. Like it was a sweet gig, unlimited vacation time, high six-figure job, stock options. There's a PlayStation at the office, and you got what you need. Free lunch. It was a good gig. So you get a little bit complacent, and I might have carried it on a year longer than I needed to. I knew I was ready to like sink my teeth into my next product, and I had the financial backing to do so because we had a lot of success at Grubhub. So I think I probably could have started a little sooner. But other than that, like, I don't have regrets. I wouldn't do things differently. Everything that I've experienced is exactly why I'm where I'm at today, good, bad, or indifferent. I'm certainly not immune to failure, and my success is certainly not locked in for life. But we're on our way. Like, we're well on our way.
You guys certainly are well on your way. And one of my favorite answers to hear is no regrets, because I wouldn't be where I am today with the skills, knowledge, and experiences that I have today. So, in that case, I will rephrase the question. Stack goes down, you lose every ounce of wealth you have, and you have to restart from zero again right now. How would you rebuild?
Oh yeah, I mean, I would get a job. Well, let's assume that my career and namesake is not tarnished. You know, I'm very employable. I have a lot of unique experience. I would go find another startup. I would go find an opportunity I was really passionate about, maybe in crypto, maybe not. I would convince, a Series A stage founder to hire me in an important role. I would draw enough of a salary to live, and I would immediately begin investing all of my disposable income back into the stock market, back into crypto, and I would do everything that I did last time, and I would do it again. If I had, like, in a hypothetical scenario, amnesia and had to start completely, I had to erase the last 5 years, and I didn't build this experience as a CEO and as an investor and as a thought leader in the crypto industry, and I didn't have my name to, like, at this point, like, if everything went to shit, I could probably use my name to help dig myself out of it. But let's assume that wasn't there. I would go into sales. I would start right back where I was at 16 years old. I'd find my job at a call center that's paying really good commissions. I would beat every single person every single month towards their sales goals. I would be the number one salesperson there. I would take every dollar of commission. I'd invest it, and and then we'd be back on a podcast in another 5 years. Ultimately, like, if you can sell yourself, a product, your vision, an idea, teamwork, if you can just sell, you'll never go hungry. Like, you'll never not have an opportunity to make money. And so that's the skill that I've always honed. It's the skill that got me my first job. It's the skill that landed me a role at Grubhub, which landed me an opportunity at this, which met me to this person, which introduced me to this guy who, got on the call with this person, and so forth. It's a lot of doors get opened.
Through sales. Terrific answer again, covering both ends, one with the name that you've built and one without. Two questions diving into that answer a little bit. One, what's the best way to learn sales? Is it direct experience, or are there resources you'd recommend? And secondly, where would you find a Series A founder? How does one go about finding that Series A founder to work for?
Yeah, I mean, the second example of, like, using my name is because, I operate with a lot of integrity and transparency, and I know that there's really no way, no matter what happens, where I wouldn't be super employable. Like, there's a very possibility that Stacked does fail. We are a Series A level startup. 90% of Series A startups fail. Even those that raise 50 or 100 millions of dollars, they still fail. So, like, I always have in the back of my mind the reality that, like, this could all go away. And if it did, like, where would I go? I would continue to lean on my skills. So how do you find those opportunities? There's a lot of different resources, but Angel List and, like, Product Hunt come to mind as, like, easy top of funnel opportunities to, like, just run through all the different, like, cool ideas that are being worked on across multiple different niches and, like, industries. And due to COVID, remote work is so much more common that you can literally live almost anywhere, likely in the United States, and have a shot at getting a job. Whereas before, if you wanted to work for Grubhub, you had to move to Chicago, point blank and simple. If you wanted to work for Facebook, you had to move to San Francisco. Like, that was just the way that it had to be done. That's no longer the case. So the opportunities are much more bountiful. And if it's more specific, like, get on crypto Twitter, right? Like, if you want to work in crypto, there's no shortage of companies, and it's literally a DM or a Telegram chat away from your next opportunity. Before I started Stacked, after I quit Grubhub, I had this transition period where I wasn't making money. I didn't really have, I knew I was going to start a company. I didn't have much of a plan. And I decided I was going to do some consulting and use my experience from Grubhub to help some different crypto startups. And I sent some DMs. And one of the DMs I sent was to a guy who went on to start a company that's now had a lot of success. I still operate as an advisor. It's been very lucrative from like a token standpoint. 3 years now in the future, like, things have gone really, really well. And that was one DM, like, hey, do you want to meet for coffee? I'd love to chat. How do you find a sales gig? Move to Florida. That's where every call center in the country is operated out of. Move to Orlando, Florida. There's a sales call center on every single corner, and you can literally, you can be a felon and you can have no work experience, and you can sit down in a call center, and after one interview in one day, and you can start selling vacation packages and start from the absolute bottom. When I was 18 years old and I was poor and I had already dropped out of college once, actually I'd been kicked out of college once, and I had literally no money and no nothing and no experience and no name, I literally walked my ass into a call center and I sat down and I said, I can sell this better than anybody in here. There's a few more words exchanged, but that was my interview. Listen, I'm looking around this, but like I can sell this product. I can sell it better than anybody in here. I was the youngest guy by 10 years. I was probably the only one without a record in a drug addiction, but there we were. And there I was making phone calls. And there I was pulling down 50, 60K a year at 18, doing sales, 30 hours a week while running like 3 different side hustles and trying to learn how to program my first mobile app that I was teaching myself how to do overnight while I was still enrolling back in school and trying to, find some way to succeed. So it's an absolute hustle. Like, people listening to this right now, many of them are in the position I was in at that time. Many people are in a better off position than I am now, and people fall everywhere in between. So it all depends on your personal circumstances. But if you're at the absolute bottom of the bottom, just understand at the very least that I started from zero. A lot of people that you've talked to on this podcast started from zero. And so the key thing there is start. It's start. You're already at zero. Start. Like, move in that direction. That would be kind of how I think about it.
Joel, you're so deserving of all the success that's come your way, starting from zero as well. Because yes, if you do start from zero, play the cards you're dealt. But at the same time, there are so many disadvantages to starting at zero, which people overlook because it's fucking difficult. It's just compound disadvantages, and there are so many people in better positions that just start 80% of the way there, have to push that 20%, so congratulations.
And now that I'm in the position that like I'm in now, I do meet a lot of guys and girls who may be founders, right? Like, I go to a lot of these like networking events, so I'll just speak to that. It's definitely true in crypto, but crypto is a little more self-made. But I'll be at these like starter conferences or whatever, and like 75% of the people I talk to, if they're funded, they probably spent their early 20s not worrying about paying bills. They probably didn't have tuition to worry about. They didn't have to rush and go get a job that they didn't really want. Their mom or their dad was a lawyer or a doctor or a VC or someone who introduced them to someone. And they were able to take $5 million in funding down on a pretty mediocre idea. And they're asking me how to generate customers. And I'm like, you can't generate customers with money because no one wants to use your product. It's 100% true that, like, yes, there's so many of you guys listening, especially if you want to be an entrepreneur or start your own business. So you're going to see other people and you're going to say, man, that's not fair. Like, that guy's mom wrote a check. That guy's like grandpa was the founder of this, that, he went to Stanford. And you're 100% right. It's not fair. But the other truth is that doesn't matter. Whether it's fair or not is irrelevant. It doesn't change anything for you, and no one gives a shit if it's not fair. Like, the real world is tough, man. It's like, and it's dog eat dog, and it's aggressive. And if you don't want that, there are a lot of like pretty quiet jobs in pretty quiet parts of the country and of the world where you can go and work and live a pretty quiet life. But if you do want to be loud and you want to be heard and you want to be seen, which most people do nowadays, and you want to make an impact or build something that's meaningful, you're going to be going up against people who have an advantage against you. And you just have to try to find a way to use that as motivation. And you just have to be embracing of failure. Um, you got to start.
And that mindset is, do you think that's something you've always had, or something that can be built?
Oh, it can be built, but like I was homeless until I was like 6 or 7 years old. Like I was raised by a single immigrant dad. We lived out of a garbage bag. Like I went to 3 high schools. Like I had holes in my clothes and my shoes for a good part of my younger life. I was very much loved, but only by one parent, and it was a parent who had to work 100+ hours a week to keep a roof over our head. Survival was you're literally built different when you come up in that type of environment. I have a lot of weaknesses as a result of coming up in that environment. My fiance might tell you I'm not as emotionally available. My co-founder might tell you I'm more stubborn. My investors may tell you I'm more anal about certain things, or I'm more particular about the way things are done, or whatever. Right? None of us are perfect, but what it sure as hell gave me was like a never give up, thrive or die type of attitude, because it was either like stand out and be like the best, or literally no one was going to pay any attention because you don't have any advantage. No one knows you. No one knows your family. Growing up, all the friend groups around me, like they all knew each other from kindergarten. All their parents were friends, and they're at the soccer field. And my dad wasn't friends with any parents because he was working a blue collar job 100+ hours. I moved around a lot. Like those are all major disadvantages in one sense that have probably led to some things that I could work on, but it gave me a lot of strength too. So yeah, I like for me, it wasn't taught. It was just I just evolved like that. But it can definitely, like, mindsets can change, work ethics can improve, like skills can be learned. I've seen a lot of guys, um, and a lot of people, especially in my sales career, who I would like hire when they were 20 and had a certain arrogance about them, or a certain they were naive or whatever, who now I know at 28, and they're like leaders of their respective organizations, who are really productive, great, helpful members of society. So people can grow. I definitely believe that. So yeah, if you didn't grow up like I did, like you can certainly still be a go getter and a workhorse. You may have different motivations though. Certainly, maybe it's just to impress your parents or your friends, right? Whatever it is.
I didn't realize the extent to which you meant you started from nothing and worked your way up here. So, even more congratulations. Your dad also sounds pretty awesome. What
My dad's a rock star. Yeah.
what lessons did you take? What are the best lessons you've taken away from him, and what has he passed on to you?
Yeah. So do things the right way. When I vacuumed my room as a kid, if I went around like something on the floor, things like that, I can very vividly remember him being like, do it all over again. Like you don't half ass, like you don't shortcut. I apply that running this business. And it costs us money. Sometimes it costs us growth. It costs us opportunity on occasion, but sometimes doing things the right way it's just, you just do things the right way. It's just like fully around the edges. Like you just finish everything. You don't do it half-ass. Yeah. And like hard work, beats talent, um, pretty much always, is probably the number one thing my dad taught me. He'd be the first one to tell me, like, listen, I'm not the most talented or whatever, but like you're not gonna beat my dad. Like he's in his mid to late 50s now. He's pretty young, all things considered, and he's still up at 5 in the morning, works out, goes like he that blue collar industry that he works in. He now is like very high up in that industry. Um, Still, I'm sure grossly underpaid and overworked. It is, after all, still a blue collar industry. But at the end of the day, he hasn't changed that work ethic. Hard work beats talent when talent doesn't work hard, or whatever they say. I'm not particularly talented at freaking all. I'm not like super smart or any of those things. It's just like, what else are you gonna? I just work. I just How'd you learn how to build websites? Well, I went on to Google and I typed in how to build websites. Like that's, how'd you learn how to, you know, I go onto the internet, I go onto YouTube, I go into a library, and you just and I read
I
it.
mean,
Like, I don't know what else to tell you.
that is smart. That is like the most important thing in an early stage company because you don't know what you need to do. You're going to find out what you need to do when it comes up, and then you need to learn really quickly how to do it. And if you can't do that, you just won't survive in this environment.
No. Yeah. And the market will spit you out fairly quickly. And don't get me wrong, there's people in this environment that I'm competing with in some sense now with Stacked who have it better off. Like they lucked into some BS, or they have a scam token that was able to raise $20 million, or they don't even have a product and they have 10 times more cash in the bank than I do. And they don't even have users. Like, not only is that something I see, that's actually common. That's like 9 out of 10 crypto businesses. I live in the space of froth and BS. Like, I'm surrounded by absolute just tomfoolery. And so continuing to put my head down and try to build this the right way, like, you know how rich we could be if I just had a stack token. I could have put out a stack token. Sam Bankman-Fried himself told me on the phone, I will create a token for you. I will list it on my exchange. I will treasure it for you. I will give you my lawyer. This is the most powerful man in crypto. Told me this 6 months ago. So am I stupid for like not making millions of dollars overnight with a token? I don't think so, because we didn't need a freaking token. So we didn't do it. One day in the future, we may have a real need if we progress towards like a DAO or something to have a token, and then we'll do it. So yeah, I mean, it's just something that you have to just kind of accept and worry about yourself, work hard.
I love that. The way you approach that, the opportunity, it takes a lot of character to have that sort of money right in front of you for the taking. You say, no, I want it, but not like this, not this way. I know how to get there.
Me and my team every day for like a month, we're just bashing our heads into the wall. Like, one of our advisors is Jordan Fish. He's known as Crypto Cobain on Twitter. He's like, dude, I'll give you millions of dollars for a token for sure. I'm like, I was like, but I don't need a token right now. I just don't need it. There's just no use for it. But there will be, hopefully, one day. So maybe another podcast will be dropping a token or something. Let the rumor mill start here.
Reach out to me because I'll be diving in head to invest in that.
Just rest assured, if we do it, it'll be because we finally figured out a way to do it right. To do it. Keep in mind, I'm sitting here in Chicago. Across the street is the SEC. So it's not, listen, if I lived in, and this isn't to say, but if I lived in like Dubai or somewhere else, like not here, probably it would have weighed into my decision at the very least. But like, listen, I don't know enough about it. I'm not legally prepared enough. I don't have the right resources. I barely could find one blockchain developer. They're so hard to hire. What the hell am I going to do with a token if I can't even hire a blockchain developer? So, all that to say is stay tuned.
Joel, thank you so much for your time. This has been a terrific episode. Really, I always enjoy it.
Yeah, I love talking shop.
It's been a pleasure. Is there anything you'd like to leave our listeners with before we wrap up this episode?
Stop trading and start automating. Try stacked.com. Stop losing all of your money to the markets. And if you're doing a good job preserving wealth, and listen, if you're a subscriber of Market Meditations and you're listening to this podcast, I'm sure you're preserving your wealth just fine, because my guy here has got you. You're in good hands. But I would just leave everyone with this. Time in the market is way more valuable than trying to time the market. And if you can still and continue to invest in crypto assets over the next 5, 10, 15, 20 years, and you put that mindset into it and not just like, oh, I need to get rich by summer on this Doge long. If you just take a more long-term approach to this market and you can survive, that's all you have to be able to do is survive these drawdowns. You can't get nuked. You can't get rinsed out. If you just survive these drawdowns, you have the best opportunity at building generational wealth that anyone on earth has ever had. You just got to survive. So be patient. Don't be greedy. Use common sense. Don't invest more than you can afford to lose. Invest over time, etc. Do those things and you'll be fine.
Meditators, try stack.com. It's an incredible platform. Joel, thank you so much for joining me. That's all from us. Joel is truly deserving of all the success he's received. He hustled his way up from the bottom. He embodies patience, hard work, and determination. He also shares our sentiment that crypto investors and traders can be too short-term in their thinking. And this is a sentiment that we at Market Meditations mirror, and we're always sharing new strategies that traders and investors can use to benefit from a more long-term mindset. Just the other day, I did a really detailed piece talking to crypto investors about how lack of patience can really cost you a lot in these market conditions. Don't forget to sign up with a link in the description below, or just head over to 𝐏𝐸𝐺.substack.com. If you enjoyed this episode, check out our first conversation, the first conversation Joel and I had, where he shared his story of how he built Stacked into an 8-figure business.